Good morning, everyone. Sorry if I'm like looking crazy, staring at the screen and not saying anything. I was waiting for the numbers to start going up. How are you, Lori?
I'm doing great. I know you always, Lauren, you're looking to make sure everything's moving okay. So I always wait for you to say, hey, everything's going great. I'm doing wonderful. Now, isn't spring break coming around the corner for you guys? Or you got a ways yet?
No, spring break already occurred, if I'm not mistaken.
Oh,
Yeah,
summer. Summer is what I
summer
meant.
is coming.
Sorry, summer. I meant summer break. See, you can
Yeah,
tell I don't have kids. My cat doesn't go to school. I get it all confused. In other words, soon the parents are going to be pulling their hair out.
100%. 100%. Right now, it's like, okay, what summer camp?
Yeah.
What can we send them to? So,
What can we do to have them entertained for a while? Well,
100%.
I want to say welcome to everybody. Welcome to everybody new to the show. Welcome our frequent flyers. So we always are so happy to have you along. Today we have another fantastic show with lots of valuable information that I've been wanting to communicate and I talk a lot about. So this is going to be a really cool show. And we got some others that are coming up, a full lineup all throughout the summer that I'll be telling everybody about. So with that, Lauren, I'll let you go ahead and get us started.
Perfect. Here we go. So, Lori,
Yep,
really
I can see your
quickly.
screen. Yep.
Thank you so much. So good morning, everyone. My name is Lauren Simpson. I'm with the SBDC, or the Small Business Development Center. We're a national program with over 1,000 locations across the country, and we offer no-cost services to local small businesses. Now, our services are at no cost to you because your tax dollars have already taken care of our fees. This is one of those free things that you definitely want to make sure you partake in. So for the Los Angeles network, which is the network that we represent, we have locations throughout the Los Angeles, Santa Barbara, and Ventura counties. If you are within any of those counties, again, Los Angeles, Santa Barbara, or Ventura, be sure to get connected with one of our local centers. And so you can see them represented on the map in front of you. You'll see we're in Camarillo and Santa Clarita. Then we're all the way over in Pasadena as well as Laverne, throughout Los Angeles, the South Bay, down into Long Beach. Again, you'll want to get connected because we offer no cost business advising. And so you're able to sit one-on-one via the phone or a Zoom with one of our business experts. And we have experts in various arenas of marketing, business planning. If you're looking to go from construction to, from handyman to construction. If you need someone to take a look at your numbers, we have a guru of numbers, Miss Lori Williams. We have also a goddess. So if you would like to have someone take a look at your social media strategies, we have our social media goddess. So please be sure to get connected with our network. And then finally, we also offer virtual trainings. Nothing's quite like the show that you've joined today, but our virtual trainings are pretty good. They're comprehensive and they are there to assist you in either beginning your entrepreneurial journey or adapting your business or growing it. So finally, be sure to get connected with us today. You can reach us by phone, 866-588-7232, or you can go online at smallbizla.org/new client. Now, for those of you who have reached us and you're outside of the Los Angeles, Santa Barbara, or Ventura counties, don't fret. Go to americassbdc.org/find your SBDC, and you can get connected with a local office that way. Really quickly, before I hand it over to Lori, I want to be sure that we do some housekeeping. So for those of you who have joined us, please be sure to put all questions into the Q&A. Again, questions into the Q&A, and then check the chat for any notes as well as links to previous shows, as well as ways to get connected with our guests today, as well as Lori. All right, Lori, giving it to you.
Awesome. And good morning, Emma. I see her out there. What would life be without Emma? Okay, I got a few things to go over today before we get started. And Lauren is going to put all of these links into the chat. These are very good links from the IRS website. I know I said good links from the IRS website. You're thinking, really? I have to say that the IRS website has a lot of pages that are actually quite easy to understand. And one of the comments or expressions I use all the time is when you're trying to understand any kind of government regulations, tax deduction, if you need a license, registering a legal structure, go what I call straight to the horse's mouth. Please don't go to people's blogs, Google the information. There is just more incorrect information using these type of resources than correct information. And at the end of the day, ultimately, you're responsible for the information that you act upon. So when IRS sends certain links to me, which I get all the time being an enrolled agent, that I think are very good and good resources, I like to give them to you so you can put them in your files as future resources. So they have these 4 links plus another one that Lauren's going to put in, and it will give you an overview on everything that you need to know from starting a business all the way to closing a business. Now, I don't have a slide for this. I'm going to talk about it a little bit next week, but I would just want to give a heads up to those of you who formed an LLC last year and took advantage of the exemption of the $800 franchise tax fee. That $800 would now be due, has already due in April. That is paid in advance. It's not paid in arrears after, it's paid in advance. I'm seeing a lot of people that don't understand that, and they don't realize that they have to make that $800 franchise tax. So I'll give some website links and delve into that a little bit more next week. But I try to bring up on the show what I see continuously as I'm consulting with people, so you can kind of learn from the other issues that people are experiencing. Now, as far as upcoming classes, I'm starting my financial literacy series. Once again, I was going to take a break during the summer, but it's just so popular. I'm going to keep it going. Change the time a little bit earlier this session. Maybe it'll help you to get it done in the morning and then have the rest of the day to do whatever you need to do. Session 2 and session 3 are best taken together. Those are the ones where I go into the Excel document. I talk about financial management, which we're going to talk a little bit about today, managerial accounting, where you're actually understanding what your numbers are, profitability, and running your company based on an understanding of those numbers. I'm also bringing back my legal structure for your company. What are the tax advantages? This is through the Pasadena SBDC. Shout out to the Pasadena. Annie, if you're with us this morning. Once again, this is another very popular webinar. And I started because of all of the misunderstandings. And I was getting people contacting me all the time saying, oh, I started an LLC rather than a sole prop to receive the tax advantages. And I always tell them there is no tax advantages. It's the same thing. It's just a different legal structure. So a lot of people don't understand that there's forming these type of corporations. They don't know what that means, what the requirements are. And I'm also hearing this newest thing, which there's a little bit of truth to everything. Not that the LLC has a tax advantage, but people are contacting and saying, I'm forming an S Corp or being taxed as an S Corp for the tax advantage. Although there is one, if you don't reach a certain profitability level, it's actually a disadvantage. You're paying in more taxes. There's these concepts are not one sentences as they're portrayed online. They actually got many layers below them to understand before you engage in these. So if you have any questions on that, the webinar is coming up, and once again, you can reach out to me with a one-on-one, and Lauren will give you the information to contact me. Now, upcoming shows next week, we have Arnell coming on, and she started a company that made mixes, baking mixes. And she started it from scratch, no pun intended, the recipe was from scratch too. And then she went through the entire process of running the company, operating the company, and just recently sold the company. So this is another one of those fascinating stories that can take you from beginning to end of a very small company, struggles with packing companies and different things that she had to go through, and then what she learned during the process of wanting to sell the company. So it's a really good story. Now, Randy, which is our frequent flyer. Hello, Randy. She's coming back on the show the following week. She runs Unique Textures Beauty Supply. And I asked Randy to give me a little bit about the company, and what she wrote is, being a frequent flyer on the Small Biz Talk, she's been able to obtain a lot of information and wisdom, not to mention all her wisdom from running her company for such a long time. Randy's going to come on and tell us a little bit about what she's learned over the last year and a half and what she's seen as far as changes changes within the way that she runs the company. Andrew Cohen is coming back on as well. He owns Work Better Now. I'm really interested in having Andrew tell us more about his business model. It's kind of what I'm calling a business model for the 21st century, because they use a flex team staffing and have people help other companies within the administration role. Without getting into the details, I'm just going to leave it at that. But it's really how you can create a virtual company that is actually has quite a large footprint down into South America, et cetera. And I'm going to have Andrew come on and share more about how the company is set up and how the company operates. So as you can see, we've got some very exciting things coming up. Now for today, I'm very excited to be welcoming back Clarissa Wilson, which is the owner of Nerdy Number Lovers LLC, which every time I say that, I got to say, isn't that a great name? Nerdy Number Lovers is an accounting firm that works with small online businesses to make accounting and bookkeeping as easy as possible. I know you like those words, as easy as possible. She works with her clients to make sure their accounting is done correctly and the owners understand their numbers. You know, that's dear to my heart. I have asked Clarissa to come on the show and share again with us the best practices that she's developed over the years and some insight and information. Clarissa, thank you so much for coming back on the show. Welcome back.
Thank you for having me.
Well, the last time we just kind of started digging into some conversations that I want to pick up with. So first of all, I just want to make a quick sentence to say that we are going to be talking about primarily QuickBooks Online, but I just want to acknowledge for our audience that there is two versions of QuickBooks, several, but you know, there's two, one being the desktop version and the other being the online version. I am a desktop version user. Clarissa is much more of an expert being the online user. And that's why I wanted her to come on to speak about online. Now, I prefer desktop, possibly, you know, probably part of it too is I've been around for a long time and that's all there was. So I was very comfortable with the desktop. And that tends to be the version that the larger companies use when they use QuickBooks. And so that's where I had a familiarity with it as well. As Clarissa shared with me, they're becoming less different, if I can use that terminology, in the way that they're set up for reporting and technology and auditing. At one point, there was such a difference. I didn't like online at all, being of the CFO nature, because they didn't have the auditing. The one distinct difference I still see, which is a personal choice, is, and I like to explain it this way, maybe not the best way, but it's, you can understand what I'm saying, is that desktop is more like the Microsoft 365 subscription model, where if you don't buy the subscription, you can't open it, but it stays on your desktop. You still own it like a Word doc, where online is more, I hate to use this example, but it's a good way to explain it, like a Facebook account. If you stop the account, your data is not going to be available. So me being more funny about data being available down the road, that's a distinct difference for me as well. So I just want to, out of just setting some clarity, because that's the whole goal today, is creating clarity, I wanted to make mention of that. So Clarissa, I'm going to pass this to you, and I'm going to start this by saying one of the reasons that I invited Clarissa on to begin with, and I have her back again, is that I met her when working with one of my clients through the SBDC. And when I first looked at the financials, I knew that they were using online, but I was shocked to see how correct and accurate they were, how properly they were set up. And I don't see that. I hardly ever see it, right? So I immediately went, wow, this person knows what they're doing. This is amazing. And I asked Clarissa immediately, I said, you syncing the data? Because every time I see somebody sync their data, it's never correct. And she says, oh, I just turn all that off, right? And so that's when, because we were discussing the client, I really couldn't get engaged with the conversation of, well, what do you turn off so I can share with my audience, since I'm not an expert on online. So now I've got the expert. And so I back it up to a point where people understand even what we're talking about. But Clarissa, you know what I'm saying, by share with the audience, when you use desktop, or I'm sorry, when you use QuickBooks Online, what are you turning off and why?
Okay, so you connect your bank account and you sync all of the information from your bank account. So it's basically like real time, where anytime you bring money in or spend money from your bank account, it is showing in QuickBooks based on when it happens in your bank. The thing that I'm turning off is the automatic acceptance of those transactions. So in QuickBooks, you can set rules for what certain things are. But I will caution you that QuickBooks does read some of these rules wrong. I have had several instances just in the last couple of months where they're reading these rules wrong. I have one client who brings money in from Amazon, and QuickBooks continues to read that they have a rule that it should go to hardware sales. And I keep getting a transfer between bank accounts. I get Amazon expenses. I think I've gotten even uncategorized expenses. So you can set those rules for where you want those things to go, but do not turn on automatic acceptance, because that's where, like, if it's reading it wrong, like I just explained, you're going to have your information wrong.
Yeah, and Clarissa, what you're mentioning right now is my biggest issue and reasoning to try to get this word out to everybody, because QuickBooks has sold everybody on this belief that you can take an entire department, your finance and accounting, which is one of the three legs of a stool for the success of a company, and simply sync all your data and it magically will work out, which is one of the major biggest lies that I've ever seen. It's a marketing thing. It's not the truth. And to your point, I have seen horrendous things, and an easy example for everybody in the audience to understand it. During the time when there was idle loans or grants or money coming in, QuickBooks just would be accepting this as income from customers, and then the clients, the people who have the QuickBooks file, they hand it to the CPA. The CPA doesn't know what the sales are, and now they're paying taxes on the money that they had to borrow to pay bills. To me, that is horrific. And I would love to say I've just seen that once, but I've seen it numerous times. And I've looked in people's QuickBooks Online accounts, and they have thousands of transactions that they're just accepting without even looking at, just assuming it's correct and hoping that the accountants will. But one thing they don't understand, especially in the small business world with compiled financial statements, which is what the accountants accept, it's the owners of the information's responsibility to have it right. They're not going to audit this to make sure it's correct. And these numbers are the foundations of how much you're paying tax on. And if you're paying under or over, neither one of them is a good one. Okay. And at the end of the day, you are highly responsible. So what I'm understanding is that you can use the benefit of the syncing, in essence, and change my words if I'm incorrect on this, in essence, from not having to retype the data, but you're still letting a human analyze, understand, and properly categorize the data. Would that be correct?
Yes, that is correct. That's correct.
Now, in doing so, and this is one of those questions I've always wondered, and I could be incorrect on this, or maybe there's a slight truth to it, but it's insignificant. When somebody enters something in desktop and they're selecting the categories, they are really conscious because they have to make a category selection. If they're just checking to see if QuickBooks aligned it, they may glaze over and not be as detailed. So when you're saying that you turn off the acceptance, is it still suggesting the category, and you've got to be very vigilant about making sure it suggested the right category versus you are selecting the category? Does that make sense what I'm asking?
Yep.
Okay.
It makes perfect sense. And yeah, it's the exact same thing. And even if you don't have the rules set up, QuickBooks will still, for the most part, suggest a category to put it into. But like you said, you have to pay attention to where it's going. I have one client, for some reason, they have Google ads, they have Facebook ads, but QuickBooks, for some reason, will continue to read those Google ads as Facebook ads. So, and we have two separate categories, one for each. So we make sure that everything is going to the right category. But all of my Google ads keep showing up or being suggested to go to the Facebook ads one, and we have to change all of those.
Gotcha. So here's another topic, and once again, you correct me because I'm not an online person, but for me, one of the things that makes everything correct in finance, CFO minded, is reconciliation. You know, reconciliation of accounts is when you speak to anybody that's got that mindset in accounting, that reconciliation of accounts is the foundation of accuracy, if I can say it that way, right? So when I teach somebody to use QuickBooks Desktop, I'm very adamant that you don't go forward until you get a 0, meaning it reconciled, and you don't just like QuickBooks choose how to reconcile it for you. It creates a nightmare. So to me, that act of reconciling the bank account is the showstopper, which is the defining difference between when people's data is accurate and not accurate, because they're catching the mistakes. Now, Clarissa, interestingly, at first, you know, when I started hearing about people using QuickBooks Online, I almost suspected that QuickBooks Online didn't have the ability to reconcile on a monthly basis because nobody was doing it. But then I understood, Clarissa, they're just not doing it. So can you talk about reconciling the bank account? Because when I say to people who are using QuickBooks, do you reconcile the bank account? I don't get a yes or no. I get a what's that? And they don't even know where to go in QuickBooks Online to reconcile the bank account. And I don't even comprehend how they don't know. So I'm just going to let you take it from there, because you understand what I'm talking about, and I don't understand what they're not doing and why.
So it's actually, I understand why it's hard for them not to know where to go, because it is kind of confusing. You have to go to the accounting tab and then reconciliation. Well,
Okay.
unless they changed it again, because they keep changing the way that the dashboard is. And I still have access to the original dashboard. So, so it depends on if it changed, but it's under accounting and then reconciliation. And then you get a whole bunch of extra prompts if you've never done reconciliation before, and they're trying to tell you how to do it. But if you know how to do a reconciliation, I skip the prompts anyway. And then you finally get to the point where you plug in the bank statement balance and the bank statement date. And then you hit the reconciliation button, and it'll bring you to the page where you see all of the transactions that happened in your bank account that have not been reconciled before that period.
Gotcha. And so those in the audience, many of the people I know are a younger age are going to have no clue when I say in the olden days, when you opened a bank account, you got this paper register. I don't think they give you that anymore. I don't even know if they do, right? So what you're doing is you're checking on a monthly basis to ensure that what you believe your bank book balance is the same as what the bank statement is. So you're going line item by line item. You'll say, okay, on the bank statement, here is a transaction check number 162. Here's 162 check number, and the numbers match. Here's the next one, and the numbers match. And so what you're doing is you're checking each of the transactions on the bank statement in relationship to what you have in QuickBooks. Now, if you get to a certain period of time, like say you're 4 months into the year, but you've got this this transaction in QuickBooks that hasn't had a check mark, it hadn't been reconciled, you know that there's something wrong with that. Or if you have something come in the bank statement and you don't have it in QuickBooks, you know you have to enter it. So that's why reconciliation is so important, because it's doing a check by check by check. And I'm assuming, Clarissa, in online, once you get to the window we speak of, it's very much like desktop. You have all the deposits on one side, the payments, and you put a check mark next to it. No, it's not. Okay, what does that screen look like? Because I know it from desktop, and you just literally are checking. What happens in
so you still have the option to check, but literally they're all just one row. You have debits and credits all just in one line. But I will say QuickBooks Online does kind of make it a little bit easier for most people, as long as your accounts reconcile, it makes it super easy. I mean, almost all of my clients are like this because I keep everything up to it. QuickBooks will go through and check what has cleared the bank. So if there's two date lines over on the one side, and one's the date of the transaction, one's the cleared date. So QuickBooks will go through and check all of those for you.
Okay.
And if you don't have anything that's like messing it up, it'll automatically balance out for you. So
Okay.
that saves so much time. And since almost all of mine are like that, it saves me so much extra time on the reconciliation. But there ends up being a problem when you have 2 or more accounts that you are putting into QuickBooks, even if it's a credit card. Because when you're moving money back and forth between accounts, you always have to match it. You can't just say it went to this account. For one account, you're saying it went to that account. In the other account, you're matching that. So matching it. So whether you transfer money between 2 bank accounts, you paid a credit card, you're always going to be matching it, because if you don't match it, then you have 2 of each of these transactions in your accounts.
Got it. So it's not like in QuickBooks Desktop where if I pay a credit card, I just create a fictitious check if I want to do online, and then it deducts it from the bank account and it shows up as one transaction under payables, right? And of course it decreases the bank account, but I don't do anything other than pay a credit card the same way I would do a vendor. You're saying I actually have to do an extra step in there, or it shows it twice? Okay.
Yep.
So do you
Especially when you link your credit card as a bank account, so that way all of your credit card expenses show up as expenses as well.
Gotcha. And then you have to be careful that you're not double dipping, I'm assuming, because it could show that. So that's what double dipping is a term in finance, meaning subtracting twice. So what you're really saying is it could subtract from the credit card and subtract from the bank account and do it twice.
Yep.
One of the things that, just looking at QuickBooks Online financial statements all the time, this is what I always see wrong. And I'm going to premise this by saying I look at the balance sheet. Of course, that's what I would look at, right? And when I look at the balance sheet, I can't say the accounts are correct, but I can say, well, this is definitely wrong. This is standing out wrong. And if the balance sheet is incorrect, there's a really good chance the income statement's incorrect, because people say to me, well, the balance sheet's incorrect, but the income statement's fine. And I tell people that's like saying, okay, my hand is completely bruised and black and looks like it's about to fall off, but the rest of me's good. These are interconnected. You can't. But the things I see on the balance sheet that clue me in immediately that there's some really bad stuff happening is the cash accounts are negative. I see them huge negative, like 75,000 when they only have like 1,000 in the bank. The credit card statements are negative, which suggests it's overpaid, which I know it's not. And then if they have accounts receivables or payables, those are also negative. And I know that there's transactions not being done properly. Now, when it gets to that point, so I'm asking 2 questions. I'm asking what is causing those, but I'm going to add this question to it. When somebody does it in QuickBooks Desktop, I can do audit trails and fix it. I can do journal entries. I can figure out what they did wrong. It's not easy, but I can fix it. In QuickBooks Online, I can't even figure out how to get the audit trails and everything because of the connection to the bank account. I can't figure out how to just do a reverse journal entry, but I'm not an expert on QuickBooks Online. So my first thing is just comment on what I'm seeing, what is causing it, and when somebody gets it just ridiculously wrong, do they have to start over, or can QuickBooks Online be fixed?
So the biggest cause of all of that, like when you have all those negative accounts, goes to, like I just mentioned, the whole matching. You have two or more accounts, and you're just transferring the money, like putting the transaction as a transfer between the 2 instead of transferring to one and then matching in the other account.
Gotcha. And when you say transferring to one, what you're doing is you're taking the money from the bank account to the credit card account to have it available to pay the credit card, and then paying the credit card that way. Correct. Is that what you're saying? Okay. So you can't just pay the credit card, because then it shows money on the credit card and money on the bank. You got to actually transfer money into the credit card account and then pay from that transferred money. Okay. Yep. Got it. Keep going.
Yep. So that's the biggest thing, where you're getting all of those negatives for the bank accounts and the credit cards, and even accounts receivable, because accounts receivable, when if you are putting accounts receivable into QuickBooks, then you receive the payment, this is where you have to match it as well. Or it's double reporting your income, because when you put it into accounts receivable, you're reporting it as income. Then when it comes into your bank account, if you're not matching it to that accounts receivable, and this also depends on where you're accepting your money from, you may have to add an entry to this part to get it to match your accounts receivable, because your fees are taken out. Like, for example, Stripe takes the fees before they transfer the money to your bank account. So you have to do a little bit of extra work on that to get it to match your accounts receivable, or you're double reporting all of your income, because you're reporting what comes into the bank as income and you're reporting your accounts receivable as income.
I get that's complicated. I get what you're saying. I totally understand. I'm sure people in the audience are going, huh? So you know what it leads me to ask then, Clarissa? Tell me if I'm right on this. I'm picking up, like, say somebody chooses, we know they shouldn't, but say they choose to just let QuickBooks accept everything on it. You still have accounting things you have to do to make this all balance out. So what you've just helped me understand is that I always thought that there could be mistakes because of the miscategorization from the acceptance, but there also is mistakes because you can't just let this, as my mother would say, this is an old time expression, run amok. You can't run amok. You've got to understand to some degree what you're doing. And it's unfortunate that QuickBooks kind of sells to people that this is a easy thing, hook it up and go like this and then hand your documents to the accountant, which is not true. I mean, kudos to QuickBooks on their marketing. I love and hate QuickBooks, okay? Part of me hates them because of what the mistruths are and the incorrectness within the small business community. You don't see this in the larger companies. And I know they've made some things easier, but God, sometimes I think people would have been better off with the old double accounting. Remember the old books? Do you know what I'm talking about? When I started my company at 25, I can't remember what they were called anymore, but you got these little ledgers and you hand wrote and it copied it on. Sometimes, Clarissa, I think people are just much better off because at least they knew their numbers and they were accurate. Because once again, I am not seeing the accountants pick up these mistakes. You report double your income, you're paying taxes on that double the income.
Yep.
So I'm sure
I've had a couple clients just this year where I have done cleanups for them, and it's just like, what is all of this? And they can't explain it. I have one client who, because like you're saying, QuickBooks does really well at advertising to get you to work with them. They make it seem like it's so easy, but it's not. This one client, she ended up using QuickBooks, whatever their live bookkeeping, that's what it is. She used their live bookkeeping. I started asking her all these questions. I'm like, what is this? Because this live bookkeeping, this is where the audit trail comes in. It's kind of hard to find the audit trail because you literally have to go transaction by transaction. And in the bottom of the screen, there's a button where you can click audit trail. This live bookkeeping had $37,000 of reconciliation discrepancies. And I was like, what is this? And I go and look further, and it's literally the fees that like Stripe and Shopify charged that they're adding into the bank and they're adding into reconciliation discrepancies. And I'm like, why? Like, none of that needs to be there. That account needs to be eliminated, but she didn't hire me to fix that year. She only hired me to fix the year that for 2022, because live bookkeeping was in 2021. And I know that we've talked about this before where you need it to be correct from the beginning.
Yep.
But I had numbers from the beginning of 2022. So we went with that and left whatever was there.
Yeah.
But
in fact, at this point, I'll bring up when we talk about a balance sheet, and many in the audience may not realize this, a balance sheet is called also the scorecard. It begins at the inception of the company, and it's an ongoing number value, right? So that's why an income statement zeroes out at the beginning of every year, but the balance sheet tells the story of the company from the inception, which then matches the tax returns year over year over year. I used to, when I taught at USC and I taught the undergrad, I was trying to get them to understand this concept. So I told them one time, think about it this way. The income statement is like Las Vegas. What happens in Las Vegas stays in Las Vegas, but the balance sheet is like the internet. You can always go back and find out what really happened in Las Vegas. And they're like, okay, I get that. But to the point of the balance sheet, and what Clarissa's saying, people say, can you just fix this year? Well, the balance sheet's incorrect. And where it really becomes a problem is that if you go for banking, banks, having been a banker, the first thing we look at is the balance sheet. So if the balance sheet's not lining up with your tax returns, we suspect that none of the numbers are correct, and that creates a issue when you try to go for banking. That's why a shout out to SBDC Act team. They always work with clients to go through their numbers before they introduce them to a banker to make sure that situation doesn't happen. Since QuickBooks Online has come into play and people are not properly putting the numbers in, this has become more and more of an issue with the balance sheet being in line. Well, I want to make sure, because we could go on, and at this point, I think I got the audience to have at least a comprehension that it's not what it claims to be. So for those in the audience that are going, oh my God, maybe I shouldn't be doing it myself, I don't mean to add more kind of concerns, because I'm just trying to get all the information out there, but just the act of hiring anybody who claims that they do bookkeeping isn't always giving you a different answer than you doing it yourself. I know that sounds strange for me to say, but at least I got somebody watching my back to explain why did I just say hiring somebody may not get you any better, and then how do you choose somebody? So I'm going to say it's realizing some people don't know any more than you do. They're just technology people, and I'm going to let you run with it. Clarissa, can you take it from there?
Yes. So the first question that you're going to want to ask someone whenever you're looking to hire is, what is your education in accounting? Not your education in bookkeeping, your education in accounting. Because
not bookkeeping. Lauren, can you put accounting, not bookkeeping, in the chat? I want people to catch those two words. Sorry to interrupt. That was so important. Okay. So keep going.
So because there are so many courses out there, there's even ads that are just like those QuickBooks ads saying that you can learn bookkeeping and work from home and be that stay-at-home mom. But if you have no education in accounting, your books are just going to end up completely messed up, like we've been talking about, because even though they've taken a course in how to do bookkeeping, they don't know the actual accounting. And bookkeeping and accounting, there is a little bit of a difference, but you have to know like where the transactions are going. And how she's mentioned Holly's books, like I have all of my clients set up so that they can look at their income statement, they can look at their balance sheet, and they know what's in those accounts without having to drill down and see what's in those accounts. Because if you can't look at those reports and just say, oh, yeah, my advertising account is all of the ads that I spent. My marketing account is the people that I hired to run all of those ads for me. Mm-hmm. So if you can't just look at those accounts and see what it is, you're going to be all over the place and not understand what you're looking at. And the other thing with these fly-by-night bookkeepers is what I actually call them myself. They will use uncategorized revenue, uncategorized expenses, uncategorized assets, and ask my accountant. Yeah. And I hate those accounts. I wish I could just turn them off, but you can't turn them off because they're QuickBooks automatic accounts that are always there. I wish I could turn them off, but you'll find all of those accounts on your reports when you're working with these bookkeepers that don't understand accounting. because they don't know where those transactions are supposed to go.
It's so true, Clarissa, and that's what first clued me in. And I looked at these and I said, what? You're a bookkeeper, you're charging people money and you're using these accounts? A bank looks at that right away and they're like, oh my God, this person doesn't know what they're talking about. Now, one of the things, and I go through this in my financial literacy session 1 for you guys, I go through the titles of each person and what it means. And what I like to explain the difference between a bookkeeper and accounting, and I'm doing this really quick just to give you a foundation of what we're talking about. Bookkeepers understand transactions. Think data entry. I data entry an invoice. I data entry a bill. I'm putting data entry. Accountants understand where, when Clarissa correctly said where these go, they understand how to look at the financial statements and do an audit to make sure it's being done correctly. So in the olden days, you never had a company hire a bookkeeper without having someone in a accounting type role, controller usually we call them, that is overseeing these transactions. But now suddenly these bookkeepers with a couple hours of training, I love fly by night bookkeeping, so true, are acting on behalf of clients as the bookkeeper, the accountant, and making decisions from a CPA perspective, tax perspective, of what accounts to put this stuff in, having no clue whatsoever. And I can't tell you guys enough in the audience how important it is to understand. So I love what you said. If you ask, what is your background in accounting, and you get them to answer. And you know, Clarissa, I have seen big companies, I'm going to say big companies, meaning not just an individual, that are just hiring a bunch of people that know technology. And Holly shared this story too with me, is one of them was then wanting to use another software that would automatically check things, and no human was checking it at all. So even hiring somebody, you have to interview several people, which is a good time. Clarissa, Lauren's putting information for contacting Clarissa in the chat. She's got a lot of resources on her webpage, excellent resources. So she's going to make sure, oh, I see it there. We've got ways to get in touch with you. I wanted to make sure on that. So one of the things that I want to touch, I know we don't have enough time, but I'm already going to invite you back, Clarissa, because these are just important topics. If I just, in a little bit way, I'm not one to promote fear, because that's like what I'm completely against. I'm trying to get you guys in the audience. Don't think I'm trying to make you afraid. I'm trying to make you aware. I'm trying to make you awake and aware, because that's my big thing. My latest thing that I'm telling people all the time is it's time we take back control. We take back control of everything, and that includes our numbers, okay? That includes our understanding of how our company is operating. So I want to just chat with you on a second of the importance of not just having the numbers on the financial reports for what we call financial accounting, which is doing the IRS reports and the government reports, but managerial accounting, these numbers you can use to make better decisions within your company, guys. Can you speak to that? And you also have some tools that you offer people, and I want you to be able to mention those as well, Clarissa. So talk about that for a bit.
Okay, before I go into that, I want to go back to making you aware of your numbers so that when you get that letter from the IRS that you are being audited, then you don't have to have that fear.
Yeah.
So, because if you have your numbers good and your accounting is good, then when you get that letter for an audit, you have nothing to worry about because you already have everything correct.
Right. Exactly. Good point. Thank you for adding that.
Okay, so knowing your numbers, when you know your numbers and you can start making those financial decisions. So you know how much your inventory costs. So when you have to reorder your inventory, how much do you have to have in the bank to be able to pay for that inventory?
Yes.
How much are you paying your contractors or your employees that work for your company? So how much money do you have to have at any given time to be able to cover just the minimum bills to keep your doors open? That's called your break-even point in accounting, but yes, so you need to know that that's the bare minimum that you have to know is that break-even point. How much does it cost to run your business and keep the doors open? And then the more that you have, the more that you go over that break-even point, then you're finding that you're getting that profit. and you have more peace of mind, basically. That's what most of my clients tell me. It's a peace of mind by having that extra money instead of just breaking even all the time.
Thank you for saying that. I was going to bring that up, the peace of mind piece. Now, I want to make a statement too. What you're talking about is so spot on. And during my financial literacy series 2 and 3, and this is all free through the SBDC, guys, Lauren put that in there. During 2, I make them go through just a simple Excel document to know what it takes to be a dollar profit. How many widgets do you have to sell to be a dollar profit? And then show how through an Excel document you can analyze, well, what if I hire somebody? What if I do this? And I tell people that, yes, there are things in life and business that we have to make some decisions on forecasting a future, and we don't have a crystal ball. That is a given. But the gut does really well when it's got data. And I can guarantee you the bigger companies don't sit there and go, well, you really can't predict, so you just got to do it and see. I hear this from the SBDC, or from, I say the SBDC clients, meaning the smaller clients. This is wrong, guys. You can forecast, you can know you're going to be in a situation before you're in it. And you know what that does when you understand this? It gives you more choice. And choice is my favorite word in the entire world, choice. Because if I have knowledge, I can have choice, and I've got the time span to make a decision. When I did a lot of turnarounds with my company directly, people would say, well, we're doing fine. We just ran into a cash flow last month. I look at the financials. No, you averted cash flow problems for 3 years by deposits. You've always had an incorrect cost structure. So we want to think beyond knowing the numbers just to fill out the IRS reports. We want to know the numbers so we have better control of our company. And most of the people I know need their company to pay their bills. They're not just sitting going, oh, this is a hobby. If I make money, it matters. It doesn't matter, right? They need the money. So having control over your business finances is giving you control over your life. And if you have control over your life, you have control over your happiness. And that's what we're talking about here. So Clarissa, I can already tell we got to invite you back. You're going to have to be a regular. I want to say thank you so much for coming on, sharing this information. I really do feel like even if people in the audience are going, oh my God, I'm a little shocked to hear all this, we've created awareness. Awareness is the beginning of understanding what it takes to do things correctly. And that alone is just so powerful on creating awareness. So thank you so much for sharing and for all you're doing with the companies you work with, because I can attest from seeing your product, your end product, you know what you're talking about. And I don't say that to too many people that are doing small business accounting. I think actually, who have I said that to? You, that's it. Hey, thank you so much for being here, Clarissa. Lauren, we don't want to get cut off before we plan to, so I'm bringing you back on to close everything down. Isn't she amazing? She knows what she's talking about, Lauren, and you know how much that means to me.
I know. And Clarissa, I don't know if you know, but I'm terrified of numbers. I'm sure like the majority of those out there. So listening to you and Lori talk though, it's like, oh, okay, I can do this. It's manageable.
Yeah. Most people are, they're so afraid of their numbers.
I know, and it's crazy because when they get to know the numbers and they start seeing what a valuable tool, the people I work with, the SBDC, and I help them to make their own Excel document. I teach them because I'm all about teaching them to manage their money and their numbers. And once they learn that, they feel empowered, they feel in control, they can sleep better. The thing that they're most afraid of is failing. Knowing the numbers will keep them from that fear. They're going to know and be able to plan in advance. So it's such an important topic. We're definitely going to have you back on. So I want to say a big thank you to our frequent flyers, everybody that's out there every week. Thank you. I see in the chat all the time at the end, people thanking us for the presentation. The show's still going strong. I keep thinking, well, eventually we're just not going to have the show anymore, but you guys keep showing up. So it's awesome. So we're going to still have it. So Clarissa, thank you again. And thank you to everybody for tuning in to Small Biz Talk with your host, Lori Williams, and we'll see you next week. Lauren, I'm going to let you take over from here and shut us down for the week. Thank you, everybody. Bye-bye.
Take care, ladies. Thank you so much. All right, everyone, be sure to check that chat. I've got information related to connecting with Clarissa as well as connecting with Miss Lori Williams. Let me go ahead and pop it into the chat one more time so that you can see how to see our previous episodes and how to connect with Lori. Oh, Teresa, that's awesome. Thank you for sharing that. So for all of you, have an amazing week. We will see you again next Wednesday, 10 a.m. for another episode of Small Biz Talk, Solutions for Your Small Business. Take care.